Hello, Arun Mehra here, and today I'm going to be talking about taxes. But before I talk about taxes, make sure you subscribe to our channel to learn more about investing, finance, and anything about money.
3, 2, 1.
Here we go! So, you want to invest, you want to trade shares, so you need to understand taxes because tax can take a lot of money away from you. So when you're going to buy some shares, you're going to firstly have to buy a share. Let's say you buy a share through a brokerage company. You're going to pay something called stamp duty. Now that stamp duty is 0.5% of the values of what you purchase. So if you buy £100 worth of shares, okay, you'll be spending 50p. Okay, and that money will go to the tax man and you'll never see it again. So that's the first tax that you're going to have. Now, if you buy a share, you might actually receive dividends. So if you get some dividends, that's a form of income. So that type of income would be taxed, and that'll be taxed at depending on what your rate of tax rate is, whether you're a basic rate taxpayer, a high rate taxpayer, or an advanced rate taxpayer, the highest band. So depending on your income levels, you'll be taxed on those dividends. But remember, you get £2,000 tax-free on dividends each year. So that's the income tax and the stamp duty tax kind of things. But the other tax that we also have is something called capital gains tax. Now, remember, if you buy a share at £1 and you sell it for £2, you've made a gain of £1 on that share. So you would be taxed on that. Now, each year, as a UK individual, you get an allowance called the capital gains tax allowance of £12,300. So anything in that gain of up to £12,300 is absolutely tax-free. But after that, if you make a gain more than £12,300, you'll then have to be taxed. Now you'll be taxed at either at 10% if you're a basic rate taxpayer or at 20% if you're a higher rate taxpayer. So these are all different taxes you have to pay: the stamp duty, the income tax on dividends, and capital gains tax, which can all eat away at your money. One of the things you have, if you haven't done already, is when you're investing, is certainly to consider something called an ISA. And an ISA allows you to invest without having to pay any income tax or any capital gains tax, because it's all in a wrapper. So each year we get an allowance of £20,000 to put into an ISA. And let's say, for instance, you put in all your £20,000 and that turns into £100,000, that gain. And even if you sold it, that gain of £80,000, you wouldn't have to pay any tax because it's in that wrapper of an ISA. So it's a really tax efficient way of actually investing, having an ISA. In addition, another way is through a pension. You can put money into a pension, and again, that can be very tax beneficial for you. So tax is something that's always there, but if you understand the mechanics and understand some of the easy ways of investing, particularly something like an ISA, you can save tax, but also hopefully grow your wealth as well. Need any other help? Get in touch, put some comments, and we'll be delighted to help. Thanks.